Hey, Saretsky here. Welcome back to the show. I record these videos on Fridays. They get released on Saturdays. So if you're watching this video, you probably already know the outcomes of tariffs to be, etc. This is a developing story. It's all over mainstream media. It's really the only thing Canadians are thinking and talking about today. So this is huge. This is a very, very important time. We just had Danielle Smith, the Premier of Alberta, on the Loonie Hour just this week. So I highly encourage you to go check out that interview to get some insight on for the discussions that are happening behind the scenes, her thoughts, etc. And we're going to continue to work on getting some good guests in the coming weeks to discuss this further. Because again, I think this is a developing story. It's been going on for some time, but the implications are significant. And so I'm going to look at that this week and how that kind of relates to my thoughts on housing, for example. Of course, we start off this week with the Bank of Canada, the BOC, as expected, 25 basis points cut. Really no surprise there, right? So you got your overnight rate back down to 3%. Basically, if you watch their press conference, you read their monetary policy report, they're pretty much like, we don't know where we go from here. Basically, how do we model tariffs? You've got President Trump, who I would consider, a really unpredictable individual. Is he putting tariffs? How much tariffs is he going to put? If he does put the tariffs on, how long are they actually going to be in place? Do we retaliate? Trying to model this out and predict is literally impossible. It's almost like a waste of time. But we have some rough idea, which is the Bank of Canada thinks it's I think a 2.5% hit to GDP. Other people out there suggest it's higher. Depends if we retaliate. So there's a lot of noise there. So I would say we can't really focus too much on the noise. What we do know for sure is, listen, the Bank of Canada cut. If tariffs get imposed, it's going to weaken this Canadian economy. It's going to be hard for this Canadian economy. And the Bank of Canada is almost certainly going to have to cut rates even further. Now, the implications on, let's say, a 25% tariff, those are going to take time to play through on inflation. BMO Economics has come out and said, listen, we're modeling a 1% increase to headline inflation, but that's next year. That's not today. And that's assuming 25% tariffs across the board. So this is really, really hard to predict. Again, the implications here are the Canadian dollar gets hit, your currency weakens, it becomes the goods that you are importing become more expensive, not only through the currency, but because of the tariffs. So this is going to be really hard on a lot of people, a lot of companies. Of course, the latest that we have from the Trump administration as of this recording, I'm recording this on Friday at 5 o'clock because the tariffs are coming tomorrow, Saturday morning, and we're told it's 25%. So again, we'll see how this plays out, if there's any last minute shenanigans. But if you're watching this, you probably already know the outcome. And so let's just assume that there are tariffs. Keep in mind that Canadians, we basically sell energy. We sell oil and gas predominantly to the United States, and we use that to basically pay for everything else that we import. So if we have to pay, 25% more on all the things that we import, obviously that's going to really hurt. And it's really almost like a tax. It's like a tax on the lower middle class. And so again, this is going to be very, very painful. So long story short, we'll watch and see the retaliatory efforts. Again, I get really concerned because we don't really have a federal government today. You got Parliament prorogue. You've got JT who's leaving the office in a month. This is probably the worst time. These guys put us in the worst possible scenario. They put us in the worst possible position to negotiate with the United States and with Trump. Obviously, Trump is not a fan of Trudeau, not a fan of his left-leaning policies. I think Trudeau in general is a weak individual. It's just not the right person to be negotiating with the United States. So that puts us in a very precarious situation. You've had these liberal ministers coming out on CTV News recently saying, we need to look at expanding our oil and gas network, more pipelines, more refineries to get our important oil and gas out to other parts. We need more customers than just the United States. They basically came out and said, we kind of hamstrung ourselves, and we know the world is changing and we need to adapt for that. But I mean, again, the last 9 years of demonizing that sector has put you in this very precarious situation where all of a sudden you say, okay, well, now we need to look for secondary customers. Well, guess what? These projects take years and years and years to actually build out. And so, again, it's unfortunate that our leadership in this country, I think, is taking us down the wrong path. And it's going to be interesting to see how this all plays out. Now, the implications on housing, of course, are twofold. One is you're probably getting lower interest rates, not just from the Bank of Canada cutting rates. So that will provide at least some relief on the mortgage payments. We know that over the next, 18 to 24 months, about 50% of all mortgages in Canada will be renewing. They'll be renewing. So you should see lower mortgage rates in the very near future as the Bank of Canada probably is forced to cut more this year. We've seen the bond market react, which is to say that the Canada 5-year bond yield has dropped quite significantly over the last month, down from almost 3.3% down to about 2.8, a 50 basis point move in a month, guys. These are massive moves. This is the volatility in the bond market. Like, this is not normal volatility. So you're getting these wild swings in the bond market. Of course, they're basically saying, listen, the Canadian economy is being hit with tariffs. That's going to be really hard on their economy. That's going to send them into recession. And so you're seeing the yields on the longer duration bond yields are coming down. Keep in mind that's what prices your fixed rate mortgages. So we're seeing again that 5-year bond yield down to about 2.8%. That should bring fixed rate mortgages probably in the next week or two, assuming these yields hold. You should see mortgage rates slide, another 10, 20 basis points. You could have fixed rates into the high threes potentially over the next couple weeks. So a good opportunity there potentially for people to lock in these more favorable rates. Again, keep in mind, was only about 18 months ago where you had fixed rates with a 6 in front of it. So we could be talking about fixed rates back into the sub 4s, which again will help. It will help. But the flip side is again, if your economy tips into recession on the basis of these tariffs, we've already created a lot of uncertainty. If you lose your job, I mean, it doesn't really matter how much rates come down. You're going to have a really difficult time servicing those mortgages. And you're certainly going to be delaying big purchases, car purchases, house purchases. You're going to be delaying that around the uncertainty. And that's the big key theme, I think, today in 2025 is uncertainty. Uncertainty around tariffs, uncertainty around the investment outlook, uncertainty to make housing decisions. And so this is the one thing I would say is everyone that I'm hearing from the industry, again, this is something that I do for a day-to-day is sell real estate in the city. We sell 99% more than any other realtor in the city here. It's off to a decent start. Things have been moving. You're seeing more activity. The open houses are busy, but the offers aren't really quite there. Again, the open houses are busy. We're seeing open houses with 20 groups, 30 groups, 40 groups through open houses. But then on Monday you had no offers, or maybe you have one offer. And so if you actually unpack it, because every realtor is saying, oh, the market's off to such a busy start, so hot. If you actually unpack the data, the January stats for Greater Vancouver, they'll be coming out in the next few days. But what we're seeing is you should see monthly sales for January. They'll be up about 8 or 9% year over year from last year, right? So it's an improvement. Better. It's good. It's better. It's getting better. We're seeing that across many major metro markets in Canada, but still below long-term averages. If you look at that 20-year average, sales are still going to be about 10% below that long-term average. So again, the demand, while it's improving, it's still not strong. And if you look at new listings, those are running just slightly above the long-term averages. So the listings are still coming on. So this is the one thing I would caution to sort of summarize this. Yeah, you're going to see some rates coming down, but the big thing right now is uncertainty. How many people want to go out there and make a $2 million transaction if they're really not sure about the company that they work for, if they're going to be laying people off, are they going to be expanding, are they being, offering job raises in this sort of climate. I mean, I think as a business owner, as a company, it becomes very difficult to navigate in these markets. If you get slapped with tariffs, obviously you're gonna have to look to start cutting costs to keep the lights on. And so this is a real question mark. Again, even if the tariffs come, how long are they going to be in place? On what sectors are they going to be in place on? We don't know these things, so it's really hard to make forecasts and predictions. But what we do know is it's created a lot of uncertainty, and that uncertainty feeds through into the market. Similar to like all the other shocks that we've seen in the market, right? The foreign buyers tax came out, when the speculation tax came out. When you get these like policy shocks, it creates uncertainty, and people need to basically wait and see. They want to look around and see, okay, what is going to be the outcome of these changes? And then typically, as they realize, once they get the all clear, the coast is clear, then they step back into the market and start transacting. And that's why you get these air pockets like you did when the foreign buyers tax came out, where the market basically shut down for about 3 months, 4 months, until people could kind of digest the policy, realize that the world wasn't ending, and the market basically kicked back into high gear towards the end of 2016 and into 2017 after that foreign buyer tax. So I think that we've got a lot of policy uncertainty, and that's really what I'm keeping a close eye on, is what that's going to mean for housing. And so again, I would caution a lot of the calls that we're getting today is, hey, we talked to you, Steve. We talked to you last year about selling our property, our investment property, and you gave us a price. Didn't really love the price. But hey, rate cuts have been happening. It's 2025 now. We're going to be entering the spring market. What's should we sell this year? We want to re-engage those conversations. What's the price? And I'm saying, guys, the price the same. It's the same as it was the number I gave you 8 months ago. The price has not changed. And so you have all these sellers and some of these investors that have been delaying selling, or they tried last year, didn't like the number, hoping for a better story this year, hoping for a better outcome this year, and the price has not changed. And I think people are going to have to come to the realization, that's what we've been telling people, is you're in for a period of stagnation. The days of the market just popping back up, after having run up to, this is the biggest, strongest, most intense bull market in housing we've seen in modern history over the last 10 plus years. And during the pandemic, it was a boom that you'll never be able to replicate again. And so expecting that, we pulled all that demand and growth forward, expecting this immediate rebound in housing and housing prices, that if you just wait 6 months, you're magically going to get, a number that's 5 or 10% higher. I think people really need to get grounded in reality. That we're in a different environment. We are probably going through a period of stagnation, as we have before in the 90s, where prices did not move for 10 years. And we've seen other pockets of the market, downtown Vancouver, west side of Vancouver, detached properties, where they have not moved for 6 to 8 years. You are in for, the rest of the market is in for a period of stagnation. And so, what we're seeing now is these people that held on to these investment properties because they didn't like their number, tenants are now, leaving, you're getting some turnover, and the rents are lower. And now they're going, oh my God, I had the tenant in at 2,800. They just left. I had it on the rental market for the last couple months at 28, no bites, dropped it to 27. Finally have a bite at 26. And you're telling me my resale price hasn't improved either. So I think that this is, trying to ground people in reality, that, looking for these quick turnarounds in housing, it's kind of like this recency bias that these bear markets are short-lived. We are in for a period of stagnation. Rates are coming down slowly, little by little, but they're still going to be in the low 4s, high 3s. And now we have these tariffs that are clouding over the Canadian economy. and they could be clouding over the Canadian economy for some time. So we'll see. Hope that played out. I mean, I hope that helped. I mean, I think it's going to be interesting to follow along week by week. There's going to be so many things that are happening. Very, very difficult to predict, but I think it's a time for people to position accordingly. This is a time to de-risk. This is a time to de-risk, to have excess liquidity for opportunities and to protect yourself from the uncertainty. So that's my thoughts. Could be wrong, but doing our best to analyze it on a weekly basis. And we'll see you next week.